This content is for educational purposes only and is not financial advice. Consult a qualified advisor before investing. Have you ever thought, I don't have enough money to invest? Believe it or not, $100 is all you need to get started on your investing journey and begin building real wealth. In today's video, we'll explore why starting small matters, cover traditional options like stocks, ETFs, bonds, and savings accounts, dive into modern tools such as cryptocurrency and decentralized finance, and walk through a step-by-step plan you can execute right now. If you're ready to take control of your financial future, hit like, drop a comment with your investing goal, and subscribe for weekly tutorials. Let's begin with the power of small beginnings. Investing $100 in a broad market index fund that earns an average 8% per year doesn't sound like much, but over 10 years, that initial $100 grows to about $215. That's more than double your money, thanks to compound interest, the process of earning interest on both your principal and the interest it has already earned. Compound interest is often called the eighth wonder of the world for a reason. Time is your greatest ally, and starting now, even with a small amount, sets the stage for exponential growth. Before you invest that $100, though, you need a solid foundation. First, establish an emergency fund covering 3 to 6 months of living expenses. This safety net ensures you won't need to dip into your investments if an unexpected expense, like car repairs or a medical bill, arises. Next, tackle any high-interest debt, especially credit card balances charging 15 to 25% APR. Paying off that debt effectively earns you a guaranteed return equal to the interest rate you avoid. Finally, define your personal risk tolerance and time horizon. Ask yourself, is this money earmarked for retirement 30 years from now, or are you aiming for a down payment on a home in 5 years? Your answers will guide your investment choices and portfolio mix. Now, let's examine traditional investing options that you can access with $100. The most common starting point is a brokerage account. Look for platforms with low fees, no minimum balance requirements, and user-friendly interfaces. Options include Robinhood, Trade Republic, or Fidelity's zero minimum accounts. Once your account is open and funded, fractional shares allow you to buy portions of high-priced stocks. Instead of needing $6,000 for one share of a blue-chip company, you can invest just a few dollars to own a fraction of that share. Another powerful tool is exchange-traded funds, or ETFs. An ETF holds a basket of stocks or bonds that trade on an exchange like a single share. For example, the S&P 500 ETF tracks the performance of the 500 largest US companies, giving you instant diversification with one trade. ETFs typically charge expense ratios below 0.1%, meaning low ongoing costs. If you prefer bonds, bond ETFs pool government or corporate bonds and deliver regular interest payments while maintaining relatively stable prices. For the most conservative portion of your portfolio, consider high-yield savings accounts or certificates of deposit, CDs, offering around 4% annual percentage yield. While these returns won't match the stock market over the long term, they protect your principal and provide liquidity. Next, we'll explore modern investing tools, cryptocurrency, and decentralized finance, or DeFi. Cryptocurrencies like Bitcoin and Ethereum are digital assets secured by blockchain technology. To purchase crypto, choose a reputable exchange, Coinbase, Kraken, or Binance, complete identity verification, and deposit funds. With your $100, you could buy a small fraction of a Bitcoin or diversify across multiple tokens. Keep in mind, crypto markets are exceptionally volatile. Prices can swing double digits in a single day. To manage risk, experts recommend allocating no more than 5 to 10% of your total portfolio to crypto. Decentralized finance expands crypto's utility by allowing you to lend, borrow, or stake your tokens for interest. For instance, staking Ethereum can yield 4 to 6% annually, paid in additional ETH. Lending platforms let you earn variable rates by providing liquidity to decentralized exchanges. However, DeFi carries unique risks. Smart contracts may contain coding bugs, and protocols can be vulnerable to hacks. Regulatory uncertainty also looms, so conduct thorough research before participating. All right, let's pull everything together with a clear, practical plan you can follow right now. Step 1. Open your accounts. Choose one brokerage for stocks and ETFs, and one exchange for crypto if you plan to explore that space. Complete identity verification and any required documentation. Step 2. Link your bank account securely and transfer your initial $100. Consider this a true commitment. Once you set aside that $100, invest it to participate in market gains. But remember, investments carry risk, and you could lose some or all of your capital. Be sure to understand sound risk management principles before you begin. We will cover these principles in future videos. Step 3. Allocate your funds thoughtfully. A sample allocation, 70% to a broad market ETF, 20% to Bitcoin or Ethereum, and 10% to a DeFi staking protocol. Adjust this mix based on your risk tolerance and time horizon. Step 4. Automate your investing. Set up recurring transfers, say $10 per month, to dollar cost average your purchases. This strategy smooths out market volatility by buying more shares when prices are low and fewer when prices are high. Step 5. Monitor and rebalance. Every 3 to 6 months, review your portfolio allocation. If the ETF allocation drifts above or below your target by more than 5 percentage points, rebalance by buying or selling to realign with your strategy. Step 6. Keep learning. Subscribe to reputable financial news sources, read annual reports, and watch educational videos to deepen your knowledge and refine your approach. Before we finish, let's cover a couple of important compliance and safety points. I'm not a licensed financial advisor, and everything shared here is for informational purposes only, so please use it as a starting point and always do your own research or consult a qualified professional before making any investment decisions. Consult with a licensed professional for personalized advice. You've now seen how easy it is to start investing with just $100 using a combination of traditional and modern platforms. As you gain experience and confidence, you can increase your contributions and explore more advanced strategies. If you found today's lesson helpful and you're ready to take your first step toward financial growth, please tap the like button. It really helps us reach more viewers just like you. Then drop a comment below and let me know which investment you're most excited to try first or any questions you have. Don't forget to subscribe and ring the notification bell so you'll never miss an upcoming episode filled with actionable tips, expert breakdowns, and step-by-step guides designed to help you master your money. Thanks for watching, and I'll see you in the next video.